Up next on Way of the Renaissance Man, a curious conversation in 3 parts with 2 of the nation's leading business consultants.
Welcome to the Way of the Renaissance Man podcast. This is a show about ideas, personal empowerment, and celebrating the rational life. Our goal is to help each other discover the tools needed to better focus our minds, integrate our thoughts with actions, and live the lives we really want. I'm your host, Jim Woods.
Welcome to today's special media appearance from Way of the Renaissance Man, starring Jim Woods. We hope you enjoy this reprise interview from Jim's appearance with Gabe Batista and John Paul Mendoza from the Position to Win podcast, the first of the 3-part series.
Virtual space.
Let's listen in.
A heavyweight of his own measure, a Renaissance man, a guy who we actually, we were like big fans of his. Hopefully he's fans of ours. The one, the only Jim Woods. Jim, welcome back to the podcast. You are awesome. And don't want you to think that there's any pressure on you. I know you don't have performance anxiety, but the man was just telling us how he could play a harmonica, he can pick stocks, and he's a Renaissance man. Hey, Jim, welcome.
What's up? How are you? Thank you for having me. And I am a tremendous fan of both of you. Love you guys. So love what you do. Love the podcast. Love your work. Love the book. Highly recommend to everybody I come in contact with that needs that type of information. And we all need that type of information because we're all trying to negotiate and sell what we are to the world.
Well, thanks, Jim. I mean, for those of now, of course, we know who you are, but for our listeners, so do a quick little introduction. And here's the thing for all of you people who've never heard Jim. We developed this relationship with Jim, and in the middle of this, I think it was the middle of like breakfast one day, he does this mic drop on me, and that just blew me away. And I've met some really interesting people. I mean, not saying Jim wasn't interesting up to that point in time, but just the dimensionality of that. So Jim, give us a little couple of minutes about who you are, and don't be modest. Because a lot of guys have an ego that's huge, and their talent is the size of a pea.
Yeah, exactly.
And I think Jim is the opposite of that. So Jim.
Wow. Thank you. Thank you so much. But what was that mic drop moment? That's what I really want to know. I don't remember that mic drop moment.
Oh, well, the mic drop moment is that we're sitting there having this really cool discussion, and you said, oh, let me tell you about my ideas about, the market. And you start like just, once I hit that valve and you started rolling and then you drop in about, where you are, rated as far as advisors and newsletter, guru pundit guys. And I didn't even know any of that because again, when you get to know somebody, you don't like immediately, Google them. And so Jim steps out to the restroom and I like Googling him and I'm like, holy shit, I better ask this guy something more than, are you going to eat the toast? I got to ask him a little bit more than that. So that was the mic drop moment. So.
Yes. Okay. Well, that's good. I'm glad. I didn't even realize I dropped the mic on that.
Oh yeah.
I did it. Well, I mean, that's when you can roll and dropping the mic when you don't even know that you did it right. Now it wasn't even intentional.
Right.
But thank you, John. Appreciate that. Just for everyone's knowledge, my professional focus is analyzing the markets, and I write 4 different newsletters for Eagle Financial Publications, is one of the biggest newsletter companies around, and that's my primary focus in terms of professionally. I've been working in the field for about 25 years now. I started my career at Investors Business Daily, the newspaper, and I kind of really learned how to analyze stocks and to write about stocks at there, and to really kind of know what makes a stock do well and what makes a stock not do well, what drives it, these kind of things, how to look at it, how to look at a chart and tell you exactly what's going on with the stock chart. So I was fortunate enough to have some really heavyweight type mentors in the field. And that's I credit the knowledge I have to them, and also just the fact that you have to be inquisitive and you have to want to learn. I think that's a key for everyone who's listening. If you want to succeed in life, want to learn more. You know, actively learn more, because passively learning is not going to cut it. You have to really want to learn, and you have to really engage. Whatever you want to do. You want to be a chef, you want to be a stock guy, you want to be a musician, you want to be a construction guy. You got to learn what you got to know your game. You got to know your business. And after I worked at Investors Business Daily, I worked for a hedge fund where I actually traded stocks every day in and out of the markets. And I also worked for Morgan Stanley after that, where I worked at the World Trade Center for a while. And then actually kind of transitioned into the financial journalism side of things, where I was, the thing I'm doing now, basically, where I'm writing about stuff, giving recommendations, doing presentations around the country, and talks, and kind of helping investors maximize their portfolios through the different stocks that I'm able to identify and recommend for people. So it's been very gratifying. Speaking of that ranking that you're talking about, that you Googled, that's a ranking by a company called Tip Ranks. And for a long time, I was ranked the number one stock trader or they call it financial blogger in the world out of like 8,000. So, that was nice to see. And then the more important rating that I think is more important in a bigger context is they did a ranking from 2009 to 2014, which is like a 5-year period, right? Which is, is that kind of separates, the people that are lucky from the people that, that are kind of, not like just kind of are on a hot run or whatever. That's a 5-year period. And I was ranked number 4 out of over 9,000 out of that group. So things have been going well. I'm able to do some good things for investors, and I'm proud of that achievement, and I'm going to keep on doing it.
Well, and then there's this whole other side of you, which is how I got to know you, actually through my brother, which is the whole Renaissance man aspect of your life. So talk about that, because I think that's kind of interesting. And for those of you out there who are wondering, if you're stuck in something that you're doing, you don't have to be stuck in one thing, and you don't have to essentially shoot this horse to go get another horse. You can actually do other things. And so Jim has this whole other side, which is, I think, fascinating. It's probably why you're so good at doing the work on the market, because you have this different rounded perspective than a lot of these guys who are just very laser focused on one thing. So talk about Renaissance man.
Yeah, that's the most important point. I think, like, the one of the keys to being able to know about markets, and about anything, but especially about markets, because there's so many different companies in so many different areas. I mean, the corporate and the stock world encompasses the entire world. So I mean, and I'm not just like the business world, but politics, society, culture, everything we do basically has a market equivalent. Mm-hmm. So it's important to know a lot about a lot of things. So the more well-rounded you are, I think the better it is, for any profession, but especially for my profession. Now that said, ever since I was, say, in high school, or it was more like college, I got this nickname called, people called me the Renaissance man, and all my friends and stuff. And they're like, and the reason why is because, when I was in college, I studied philosophy. That was my major. But I also competed in bodybuilding, and I also competed in martial arts, and I also did music. So people were like, "Whoa, are you a musician? You're a bodybuilder? You're a martial art? Oh wait, you're a UCLA. You study philosophy? Like what's going on with this guy? He's like he does everything. He's a Renaissance man." So that's kind of how the nickname got started. And I liked it, of course, because I thought it was a cool nickname to have. Oh, yeah. So, and also a cool thing to aspire to. So I always wanted to do something with that kind of, that that positioning, to put it in
Absolutely.
your guy's wheelhouse. And so it took a while. Actually, I didn't really do anything like with that kind of idea, except for just living like my kind of life like a Renaissance man, which means you're interested in a lot of things. You want to learn a lot of things. You want to try a lot of things. Sometimes you suck at the things that you try. Sometimes you're good at it, but it's good to do things that you're not good at sometimes, because you learn how to be better at these things. And that's really important. I don't mind not knowing how to do something, because I'll just learn how to do it, and I'll learn the best way to do it. And then I'll become proficient at it, if it's something that I think is valuable for my time. But in doing that, you enrich your life. You become someone who you like to be around. You're an interesting person to be around. You're an interesting person, and you're interested in the world. And that's, I think, something that's important. You got to cultivate that kind of, that interest in people and interest in things and doing it, because the world is the most interesting place if you embrace it. Like, I don't understand the concept. People say, "Oh, I'm bored." Like, I don't know. I can't that to me is like a foreign concept. How could anyone be bored with everything there is to do? Like, I'm kind of mad that I can't do everything. There's too much stuff to do. There's so many things I want to do that I haven't done. And it kind of actually gets me mad. I want to do a lot more than anything. So anyway, to explore these things and to help people like kind of look at the world that way, I created a project called The Way of the Renaissance Man. And the website is wayoftherenaissanceman.com. It's a podcast, and it's also a lifestyle website. And I have great guests on, like the two of you. And I've had many different people, philosophers, writers, musicians, scientists, marketing people, friends of mine, doctors, health experts. I mean, from just about every walk of life you can think of. I've either had them on the show, or I want to have them on the show. Because what I want to do when I talk to people that are interesting is I want to kind of pick their brain and discover like the tools that they've employed, like the kind of the ideas that they approach, the way they look at things. And I want to take that and I want to kind of like pull it out of them and figure it out, like how to use that to enrich our lives, everyone, my listeners, myself. And then you need to take those tools, and you need to really focus on the things you want to do, and then you have to integrate all the things that you learned about it. And then the most important kind of, part of the Renaissance man ethos is to celebrate these things. Okay. So it's one thing to learn something. It's one thing to like, to kind of integrate it into your life. But if you don't celebrate your life and the way you have your existence and celebrating the things that you want to do, then it's kind of just, it would almost become a chore. Yeah. So, you need to celebrate, like you need to celebrate your wins, and even the things that you lose at, so to speak, or that you aren't successful at. You can learn from that, and you could celebrate the fact that you tried something, learned. I mean, I've learned more from my mistakes than from my victories. And I think everybody that's ever had a business knows that when they messed up, they're not going to make that same mistake again. And that's important. I know, like, part of what you guys talk about is learning from those mistakes and kind of, figuring out the right way to position yourself so that, you don't make those mistakes again. So anyway, so that's the podcast. It's a podcast. You usually do like a couple of episodes a month. And then we always have new weekly content, either written or audio content. And this year we're working on a audio book, Renaissance Man audio book, and I'm looking forward to that. Hopefully this year we can go to some conventions and speaking gigs, and it's starting to come back a little bit, but the COVID thing has put a kibosh on a lot of people's life.
And actually, Jim, that's a perfect segue, because I mean you are right on cue. You are this this guy that understands the kind of tangible side of things, right? I mean, it's hard to get any more tangible than prices and markets, right?
Yes.
And it's kind of almost the point of contact between what people's mentality and psychological mindset is versus what they actually do or not do, right? But also you're a guy that you study history, you study philosophers, so you also see things kind of from a up on high, right? In the broader sense. And so in this year, of course, this year that just passed with COVID and everything, it gave us all kinds of things that happened with the market and with companies and with things. So how did you experience that that's this year? And then also what do you think? I don't want to take too much time talking about what happened because I want to get your insight. I think everybody wants listening wants to get your insight on what will happen, right? Since you have such a track record. So tell us a little bit about what you learned from this crazy time with COVID and the markets, right? and then what that could possibly mean for us. But before we do that, I want to remind everyone to check out PositionWinBook.com, PositionWinBook.com. In that website, you'll find links for our book, of course. Most Businesses Fail in the First 5 Minutes, available on Amazon, on Barnes & Noble's, Powell's, Target, lots of places. So you can buy it straight from there. Also, you have some links onto our Facebook group, and join our Facebook group, and you can ask questions, you can interact. And also we have a couple of quizzes, the pivot quiz, if you're trying to pivot to a better position, a better career, maybe a promotion, maybe a different career, or maybe a different business line, all the different pivots we talk about in the book. You can find some information on that. Also the positioning test, and also you can take that and let us know, give us some feedback. We can let you know where you are on that. So that's PositionWinBook.com. And so now we're let's go back to Jim, and so you could tell us, Jim, what is this going to mean for us here in our near future?
Certainly, yeah, that's a great question. Well, the markets showed themselves to be like remarkably, almost unbelievably resilient in the face of this pandemic, and there's a few reasons why. But the first thing is, I mean, you saw the market go into free fall like mid-February down all the way to mid-March. It was really big. It was like a 22% drop or something like that, peak to trough during that period. And everybody was really scared. I was too. One of the trading services, or one of my one service that I use that has a trend following methodology, we actually got a sell signal in the markets like right around during that middle of that time, which means we were, we moved a lot of the kind of the major positions into cash. Now we got a buy signal again a few months shortly after that, a few months later, because the market proved itself to be so resilient. Right around that kind of bottom in March, something really like important happened that actually kind of helped the market continue to go higher, and continues to this day and will continue in this coming year, in my opinion. And that is the Fed stepped in and opened up their bond buying. They really they basically said, we're going to do unlimited quantitative easing. And that
which for those of you guys that are listening don't know, is the procedure of the government to print money and to use that money to buy assets, right? So that so that basically is just inject money into the economy, right?
Inject money into the economy, but it's not so much that they're buying like stocks in the economy. They're actually, it's a bond buying program.
Yeah.
But the bond buying program keeps interest rates rock bottom. So the fact that interest rates are at rock bottom means that means basically you can borrow money for nothing. You can put the money into risk assets like stocks. And when the market realizes that the Fed had its back and that it was not going to do anything to they call it turning on the money spigot, it's basically free money. You can borrow as much as you want for as little, and then put that money in the market. And when the market realized that there wouldn't be any kind of, the Fed wouldn't be in the way, big players, the big money started coming back into markets. Okay. And it took a little bit of time before the market came back to where it was like in the February, or several months. Yeah. But if you would have bought at that low point, now you didn't know that was low point when it was low point. Of course, no one knew that. But after about a month, you kind of saw, hey, well, maybe this market is going to continue to do well. So you would have been handsomely rewarded because the S&P 500 had an extremely good year, and we're already and we're still at hitting new highs almost like every other day. And it's most impressive, and because that Federal Reserve kind of bias, the accommodation remains, and it's going to stay that way because we know this because for people like me who watch like the Fed, like I tell people I speak Fed because I know exactly how to interpret what they say, and what they've said is through like their what's called their Federal Open Market Committee statement. Every quarter they have that, and then they also have like what's called Fed chatter, or the Federal Reserve officials around the country talking about monetary policy. And to a person, they've all said, hey, we're going all the way out. This is not going to stop. We're going to keep doing what we're doing. There's no inflation threat. There's no threat of an overheating economy. Now that's a debatable point, actually.
Yeah, that's a question also for you, right?
Yeah, that's a debatable point. I think we're starting to see signs of inflation, and the biggest sign of inflation is as asset prices, stock prices. And so that's kind of where the inflation is. But in terms of going to the grocery store, there's not really that much inflation. Or there are certain things like big ticket items are more expensive, and cars and things like that are always getting more expensive. But then other things aren't. Computers and all this other stuff, all the technology stuff is going down. So, you have to, but by the government's measures, which is CPI, the Consumer Price Index, there is no real inflation. And it's actually below what the Fed's level of desired inflation is. Fed's targets about a 2% inflation rate every year, and a 2 so around, and they're actually like raised the kind of inflation level like to 2.2. If it gets around 2.2, then they may like start thinking about somehow like raising rates a little bit or doing something like that. But it's not going to be happening at least for another year, and probably like probably even to the 2022. So that's one leg of the big kind of it's one of the big drivers of the markets since the pandemic. Now the other current driver.
Before you get into that, so for those who don't understand that, Jim was kind of lamenting that he doesn't know other languages. Anybody who can speak Fed speak is a really rare commodity, and so that makes him part wizard also.
Yeah,
because the Fed never comes out and says
no.
So if you ever and I only read once the the Federal Reserve Open Market. I only did it once, and then I had to swear it off. I stepped back from the abyss because they were talking about lowering rates, and I read the whole thing. And then I read the analysis in the Wall Street Journal. I said, well, Fed clearly says they're signaling to lower rates. And I went back and read it again, and I went, wow, really? That's what
it says?
It appears, well, and those were Alan Greenspan days. And Alan Greenspan, he speaks Martian, man, or spoke Martian. I mean, it's like, it was so crazy because he was like, it appears that it is an environment in which we get. I'm like, what? So
yeah, the Greenspan era was the one where you really had to learn how to speak Fed.
Yeah.
But now, actually, the Powell era. Well, the era before that was the Janet Yellen era, and now she's the Treasury Secretary, and she's considered like a very like what's called an uber dove, which means she advocates the easiest monetary policy possible.
Yep.
And now she's a Treasury Secretary, so that's another element of the positivity, like for stocks in terms of a dovish like policy. Yep. Now it from a sound economics level, that is not necessarily something that I advocate. It's not. I mean, I don't advocate it. I think it's a bad idea, but from a market perspective, that's what people need to understand. There's the market perspective, and then there's the kind of the sound economic perspective, and or just the overall economy perspective. Like the economy sucked last year for the most part because everything was shut down and things got crushed and a lot of industries got hurt. But the reason the markets did well is because the markets looked past that. They said, we got monetary policy, it's in our favor. And the markets knew, or at least the markets think, that at some point this pandemic is going to be over,
Right.
and there's going to be a vaccine, there's going to be a return to normalcy, and markets are a future discounting mechanism. So what's going on right this second doesn't really matter for markets. What they anticipate is what drives the prices. Back to your question earlier, Gabe, that's the pricing, pricing mechanism. It's a forward-looking mechanism. Okay.
Yep. But so, and the question in your point of view, Jim, that's just very interesting. Exactly. Is it is a forward-looking mechanism, but how far into the future is the question, right? Because again, we are talking about economic policies that, I mean, if printing money is what makes an economy rich, then, we got the solution, right? All anybody needs to do is print more and we all become rich. But, we know that doesn't work. I mean, just go to, I have a note in my wallet from the country of Zimbabwe for $10 billion, one note, right? And that used to cost less than a cent, right? Because they wanted to put that theory to the test. Say, what happens if we keep printing this stuff? See what happens, right?
Exactly.
And so my question is, how far into the future is it really towards? Does it lean towards the short term? It's my view, but what is your view?
Yeah, no, that's another great question. So what we're talking about here is something called modern monetary theory. It's also in the industry, we call it MMT. So the MMT theory for a long time, just last year even, was considered like kind of just a hypothetical type of thing. But then along with the Fed, we started getting massive federal stimulus. Okay. So no, that's different than the Federal Reserve. That's they handle monetary policy. When I say federal stimulus, I'm talking about money allocated from the Congress to stimulate the markets. And then we saw that with all the different COVID relief packages last year, something like $4 trillion. I mean, that's huge, trillion, not billion, $1 trillion. Okay. Yep. And now we're on the verge of another 2 trillion or so. And it's almost guaranteed it's going to be anywhere between 1.5 and 1.9 trillion dollars. I would say it's probably going to be more like 1.9 because right now Democrats control the House, they control the Senate, they control the White House, and they want that bill to go through. And they don't care if they don't get any Republican votes, then they're just going to do it in a process called reconciliation, which is a funny way of just saying that they can pass a budget with one vote in the Senate, one or 51 votes, So, and I think they're going to do that, and at least for a 1.5 billion package. So, or trillion package. Yeah. So anyway, so that the idea that you can spend money and stimulate the economy is modern monetary theory in action. Now, has modern monetary theory worked? Well, in the short and medium term, it does work.
Sure.
Okay? And it works because it injects money into the system, and it also allows people to start buying things, allows businesses to continue. And during a period like we're in now, which is global pandemic, shutdowns, and all these different restrictions on businesses and things like that, it allows that to continue like normal. Okay. And because interest rates are so low and there's no, kind of inability to replenish those coffers by selling bonds to the rest of the world, then it's working in the short and medium term. Okay? Now, here's the problem. No one knows what the level we have now. No one knows when that could blow up. And that is the worry of people like me and long-term people that like yourself and people that know that they can't, we don't want to be Zimbabwe. Okay. And there is a very like real danger of something like that occurring. But the problem is you don't know when it would occur.
Mhm.
And also other things would have to happen. Like the US dollar would have
Sure.
to become
Exactly.
not the reserve currency in the world. People would have to like say, hey, this place is a fiscal mess and we don't want to invest in any more of this country's assets. Okay.
Mhm.
No more bonds or whatever. Okay. You could do that. You could, I mean, that could happen, and it could happen, and someday it probably will happen. It's happened to every civilization around, where they just can't sustain the level of monetary kind of miscalculations that they've done. But right now, we are still the best house in the ghetto. Okay. we're still the nicest house in the block, even if that block is jacked up with COVID, like, a messy COVID fiscal situation. So until we stop becoming that kind of best house in the block, or at least a really nice house on the block, then we're gonna be in okay shape, and that could be. It could change in a couple of years. It could change in 10 years. It could change in 50 years. You don't know. No one knows like kind of the ramifications of it.
Yeah. Yeah.
But here's the thing that I want to make sure people understand. While someone can be worried about the long-term ramifications of fiscal, malfeasance and by the government and the Fed and things like that, if you base your investment strategy now on that possibility that may or may not happen 5, 10, 20 years down the road, you're making a huge mistake. Okay. You do not want to put your money in a mattress because you think at some point, Joe Biden's going to blow the country up. Okay. Don't do that. Please don't do that. You want to buy strong companies in strong industries with strong earnings growth, showing strong relative price strength, all the different criteria that I use to evaluate companies. You want to own these companies because people there are creating wealth. They're creating value. They're creating things that people need. They're creating earnings. They're creating better lives for people. And MMT or a Fed policy doesn't matter with that. Okay. When Apple created the iPhone, okay, people wanted to buy an iPhone because it increased their productivity. That's why that's why Apple's one of the most valuable companies in the world, because they create a product that people need, okay, and people want and people use every day. And that has nothing to do with modern monetary theory or anything else.
Sure. Yeah.
So you need to keep your eyes on that part of it. So you have to know about the big picture. You have to rely on people that speak Fed, like we talked about. But you also can't get caught up in like fear down the road of something that might happen, because it might not happen. And believe me, we'll know, like, if in the lead up to some kind of major problem, there's going to be a lot of warning signs, and people like me get paid to find the warning signs.
That's right. So stay tuned, everybody, for the next episode of the Position Win podcast, where we're going to dive into more.
Thank you for listening to this reprise interview of Jim Woods with Gabe Batista and John Paul Mendoza from the Position to Win podcast. Remember to tune in next week to hear the second interview of the 3-part series. Way of the Renaissance Man podcast and lifestyle website are copyrighted 2020 by Jim Woods, all rights reserved. For more great interviews and Renaissance Man resources, visit wayoftherenaissanceman.com.